Hello, this is George with the Harmony Trading System, and this is our market analysis for Friday, June the 10th. And let's get going. We are going to start off with YM. And actually, before we go into analyzing what's going to happen tomorrow, typically, if you watched our prior market recap and analysis from the past few days, we talked extensively about this behavior right here and how this behavior that we're seeing is consistent with what we've seen in the past as part of a leg down to the market versus what some of the traders are looking at as a bullish flag. And the fact that we are hitting that top end of that channel and the market consistently come up to these higher levels and just getting rejected was a sign that the market is going to have a big day down. And our target that we looked at was target number one at 32,358 in the case of YM. And we see this behavior being consistent across the board in all the indices. So in YM, we had this breakdown today, and it was significant, over 600 points in the Dow Jones, and this is a future contract, and that was down significantly today to target number one. So what is next? We can look at a bit of a retracement in price action due to the severity of the move, and then a continuation of that pressure lower. We should be seeing a market that could come up to 32,505 on a bounce in the morning tomorrow. But all rallies are shortable, be honest with you, and the market is gonna take some work for us to go up to these higher levels and end up breaking up the market. So what you're seeing here is something that is similar to these type of rotations. This is one of them, and you saw one, two, and the third day was significant with a rally, and then we could see if the market can produce a lower high that will give the buyers some hope that we can reverse and retest this channel and eventually break out. But that's yet to be seen. If the market continue to uh, sell off, which is high probability event tomorrow, and I will definitely be looking for more short than long in any rally as a target into 31,988, into 31,773, and then you have this 31,451. And ultimately, we have a target on the swing trade indicator here, taking us to target number two, which is 37.55. And then you have lower targets, and they are severe on the downside, but you really have to clear a whole lot of price action before that becomes a reality. So tomorrow is going to be eventful, and we need to watch out for lower price action coming in. Let's take a look at crude. Crude, we talked here about this exhaustive behavior that we initially saw in price action, and we were looking for price to sell off um, into this transitional zone, and then we were looking at the opportunity to purchase, and we were looking at 116 to 114 area as a place for us to actually start picking up some crude oil contracts. The market paused that day and flipped to target number two, so we never had our retracement to buy. And in these extended price action, I'd rather be on the safe side and just watch it and look for that pullback in order to buy versus just try to buy a breakout to a high in an in a in an instrument that can be very volatile. So target number two is hit. We backed off of it for a little bit. We'll see if we can get the key to any retracement in crude is that 119.70. We break that 119.70, we have a good probability to see 2 to 3 day retracement that could land us in the middle of this transitional zone where premium buying interest can come in for higher prices at that point. At least our risk reward will be in our favor if we buy in these levels versus trying to buy up at target number two when typically uh, people will start selling to pocket some profits. And you are at the top end of that range as well. So that's what we're looking for in crude oil. Let's move on to ES. I mean, ES and NQ and what else? ES, NQ, and Nasdaq are very similar, and Russell for that matter. They're all going to be very similar. The same pattern that we saw here, we talked about that in prior videos, that you're going to see a bit of a retracement and a push lower right here. And that's exactly what we found. And we want to see if that will continue into lower prices, which is very high probability. And that will lead us to come into a couple of levels. One of them is 4,000, which we're not too far away from it. And then 39.73.75. And then you were looking at 3,900. And then you're retesting the lows that we built up at 520. Then you got what target number two is 37.42. I mean, that's just a way out there target, and you're really breaking the lows on ES. So there's going to be a lot of work ahead of us right now, and there's a downside pressure, and we need to be conscious of any rally as a shorting opportunity since we failed to break out from channel number two, and the same behavior we saw in YM, this constant testing and then failure. People were looking at this saying it's a bull flag. Well, it's a bull flag when you get a trend in the direction of the trend, but this is no full bull flag. This is more of a trap of the longs than anything else. Well, let's take a look. We got a couple of more instruments here. What we gold? Yeah, here we go. Let's look at gold. So gold is very choppy, and it's the same deal going on here. We have channel number two. We keep testing it. The test fails, meaning confirms that the channel is still intact, and we are really. This is a couple of levels here. 1841.4, and that will lead us to 1830 to target number two, which is 1826. Target number three is going to be, it's way down there, 1765.3. You would think with an environment that is looking for defensive assets that gold will be something that will rally, but it's not. Just the price action is not reflecting this type of behavior. It's really reflecting a consolidation with a short bias, and we are looking for rallies as a shorting opportunity unless we break 1878. Then that will put us in a position of breaking out the channel number two, and also it puts us in a position where we have to reevaluate the signal, meaning that we still have some short pressure that could come in around the 1900, but we're going to be on a hands-off position and just watching the market more than actually trading it. But in as long as we stay within this channel, there is good hope that this market is going to continue to go lower. Let's take a look at Nasdaq. Where are you? Here we go. And that was fireworks, and that was fireworks in the tune of 10 grand. For us, we made it off a signal that was very important, and I'll show it to you here in a second. But again, this kind of consistent behavior was very similar to what we saw in March, where the market consolidated in and around the middle of the range, and boom, it sold off, and it sold off in a very meaningful way. Okay, so we are looking for price to break the low of today. We have a little bit of a bit of a bounce from that 50 zone. So if we break, we have to break 12,195 into a low of 12,111, and then 12,000, and after that target number two, which we came to that level and literally to that tick bounce right back up. And you could see these targets. The market comes up to them and boom. Market comes up to them and boom. It's just really very reflective and reactive to these targets. And these targets are volatility targets that factors in volatility and range. So that will be a price that we will be looking at if we continue to trade within channel number two. If the longs need to kind of show themselves, it's going to take them some effort and a lot of effort, and I don't think it's going to happen anytime soon. There's more pressure coming in here, but if you start breaking anywhere into the 12,489.75, that will give us hope that they can come up to the 12,721 and the eighth, then the 300, then off you go, reevaluating uh, uh, the this area and be in between 13,000 and 13,500 to base for higher prices. But guess what? I'd rather be short than long. I will outweigh my position on the short side versus my long, and I need to see a whole lot of work from the longs before I commit to that direction. Any rally I see tomorrow, I'm looking to get short into. That's what I'm looking for. Okay. So that's that. As far as the news, and we've been discussing the news that we're seeing here, we have a couple of items: core CPI, and we have preliminary consumer sentiment. Big numbers coming up, and that will be critical to price action. And people are expecting bad news. Be honest with you, the uh, the energy cost to this economy is significant, and it's showing in inflation, it's showing in other aspects of our economy, and it's put weighing down on the capacity of people to consume, and ultimately that is affecting everything here. So let's just keep working. So as far as the news, really, beside those two items, there's nothing to kind of watch. And in the morning, we're just gonna be patient and wait for the first half an hour, and then get going on the day. Now, there is the big trade that we did, or actually there's two of them. This is one where we got short once the market produced this beautiful captain setup short on the 200 NT Rinko. On the 200 NT Rinko, we established channel number one, channel number two. We came and broke it and retested it. Then we built up that huge signal. We waited for the market to get to 574. Once it got there, we started to add into a position to go short, and we ended up taking 1.5 candle profit, and that was on 15 contracts for 10 grand, about 9,500 or something like that. So the market rebalanced up and tested it, but it could not break above that 2629 half. And this market just saw nothing but selling all day long. 200 was significant, hit target one, two, and ultimately hit target number three, and bounced right back. All right. So, and that is it for us for the day. And remember, precision is a decision, and always trade in harmony. And we will see you bright and early Friday to end the week on a positive note. Have a good one.